All right, Joe Ham with the Fire Relay Team, doing a quick deal analysis video here. We have a pretty cool off market for now. I think it's hitting the market next week. It is an A class duplex, and it's not negative, like negative cash flow. Basically a needle in a haystack. You're not going to find A market duplexes that are not negative in any market, not even our market. So getting something like this, if you're looking for something like that, the A market duplex, I mean, they don't make them any better than this. So let's just dive into it. I'm just going to take you through. This is the email that the agent Mike put together. But let's just verify a little bit of this. So what makes it A market? Well, that's location. So I pulled up Google Maps. This is Street View. You can tell, fancy, super nice. Got the vet in the driveway. Very nice streets. I think as he mentions, he talks about, yeah, he sold to a primary home to a Detroit Lions football player maybe 2 years ago. Beaumont Hospital. You're sandwiched between Royal Oak and Birmingham. So Royal Oak is super expensive, you know, 300 to a million. Birmingham is 600 to 2 million. Everything off this Woodward Avenue is this is all super nice, uppity. If you drive down Woodward, you'll basically see what I'm talking about. And then he has comps in here as well. You got just some single family home sales, which is how we basically create locations. So you got 300, 460, 605, super nice. This is everything around this duplex. 664. This is A market for us. This is just really, really good location. So there is no denying the location. So a couple of details in here. I'm going to try to speed this up. I already looked at some of these details, so I can just kind of analyze it. Obviously, if you're interested in looking more into it, you'll get all of the details. For right now, I just have to kind of take Mike's word for it. So just analyze it. It's a duplex. Purchase price is at $300K. Oh, the biggest detail on here, it appraised for $340. So they're listing this thing for $300K. It appraised for $340 on a cash out refinance in 2024. So, you know, a market value versus appraised value, they're not exactly a thing, you know, because realtors are interpreting what market value is. But based on this appraisal, you're talking $40K in instant equity. Now, he has in here somewhere, I've seen it, $10K in updates. So we'll put in $10K in updates. And let's just say for the $10K in updates, you'll get that $340. You know, maybe when it appraised for $340 in 2024, it was slightly better shape. At 10, it kind of beat it up a little bit. So let's say get that $10K in there, you'll get that $340 back. So buying at $300, $10K in, $340, that's instant equity. Taxes, he already looked at. After you purchase, the estimated is $700 a month. Remember, taxes are capped when you own it. They only increase by a certain amount. When a new owner purchases it, they're going to spike. So you want to do taxes based on when you're purchasing it, future taxes, not currently what an owner's paying. That's what like Zillow and every other realtor, etc. gets wrong. They just, taxes are this currently. Well, they're going to increase by 10, 20, 50%. Insurance on this duplex for say $100 a month. Get the $10,000 rehab. Loan duplex, you're probably going to do 25% down. Multifamily is a little tougher to get 20. Interest rate 6.25. That's roughly about right. Income, Mike had it in there $2,700, which I think is pretty conservative based on the rent comps. If we go a little bit more into detail here, he was paying, the current owner was paying like $100 a month in utilities. And then property management, we're going to leave it out. So the A market duplex, we have a lot of resources for self-management. I think, you know, you should try to do it that way. Again, you're trying to make an A market duplex work. You kind of, you know, this is a good way to do it. A good trade-off to do it. So it's a self-manage. So that is, looks to be about it. I just think he had the utility bill back. I really think that these expenses, the income could probably be a touch. You had you're getting 2,700 rent. I just think you can build back the utilities and just say an extra 25 bucks. You're going to collect an extra 25 bucks, 30, 15 in each. Again, I'm just throwing a number here. You're going to have to look a little bit more precise, but I just want you to see the big picture. So big picture, looking at this property, it's a little under 100K to invest, but you're talking 11% in appreciation, almost 3% in debt pay down. So you're talking 13, almost 14%. That's what you compare to the stock market. So this is basically investing 100K in the stock market, and you're making 14% return here. And then the positive cash flow, the $40 a month, that's your dividend, which is more than you're going to get a dividend here. So what's crazy is, and you also got 20% in sweat equity, right? Because you made that 20K from your 10K rehab to the 340 it appraised for. And then just watch this thing grow, and then it screams. Once that mortgage is paid off, here's where these numbers just get so sweet on a market duplex like this. 30 grand a year when this thing's paid off. Equity, 830,000. So it's 100 grand investment. It turns into almost $1 million and 30 grand a year. You buy a couple of these and your retirement's done. Forget the 401k. Obviously total ROI screams, gets up to 60% total ROI when you're adding up where this thing goes to eventually. So pretty cool deal here. I think, if you're interested in something like this, most of these types of deals are going to be negative 300, 400 a month. So something like this that's a little bit positive is just pretty cool to see. So, all right, Fire Road team, let us know.